thank you everyone for joining us here today for what is an event that I'm extremely excited about. techUK, for context, we've done a lot in space past number of years. We founded UK Space quite a while ago. We do loads on satellites and telecoms, but just a few months ago, I launched a new area of work for techUK on emerging space tech, which is far broader than satellites and telecoms, and it goes to robotics and in-orbit servicing and launch and in-space energy and everything in between. So this is the second kind of big event in that series, all about supercharging investment in space. Our first one was on quantum of this supercharging investment series. Now we're on to space. Next we'll be on to gaming, and we keep going. So for context, I'm Rory. I'm in our I lead our emerging technologies work in our tech and innovation team. And for now, at least, it's kind of all systems go on space tech, if you'll pardon the pun. This is all part of our Supercharging Innovation campaign that's been running for about a year now. We had a campaign week a few weeks ago. Hopefully you saw some of that. It's all on our innovation hub on the website. Days on space, quantum, metaverse, AI, semiconductors, events, insights, articles, podcasts, you name it. And here today, we've got a really fantastic panel that I'm delighted to have join us from a range of government, industry perspectives. And really, this event is all about how we kind of tackle a problem that the UK has faced for some time and continues to face in a number of industries, even in emerging tech, which is exciting and money's being put into it. But how do we take the kind of the startups, the SMEs, and scale them up in a way that means the UK can lead on these technologies globally and kind of realize its full potential? Because there's a lot of potential there. World-leading universities, we've got fantastic space strategy and a government that's putting funding into it and giving attention to it, a brilliant minister who's championing space. But there's lots more we can do, and investment is kind of one of the kind of core underpinnings of all of this. So what better place than the City of London to have a chat today about what more we can do, building on the National Space Strategy and the documents, the publications that have come out since, with a fantastic lineup of speakers. So I'll go through quickly the agenda for today. It's quite kind of action-packed. There's a lot to cover, but we're going to be very strategic in how we cover it and to add the most value for everyone in the room and for our speakers. So we're going to begin with a little bit of an overview from the UK Space Agency. We've got Heather here today to give us that. So setting out the landscape of the UK's space investment scene, in particular from a VC lens, as VCs are absolutely essential to the kind of scaling up that I talked about is needed earlier. Then we'll go into a little bit of a recap on what the UK's main strengths and weaknesses are in space investment. It's been covered before. We don't want to reinvent the wheel, but it'd be good so everyone has the kind of common understanding. We've got people from space SMEs, space VCs in the room, government, but we've also got institutions, organizations that maybe haven't done too much in space and are quite interested in investing or finding out more. So only 10 minutes on that. We'll whiz through it, but that should be really useful. Then we'll talk about responsibilities. So techUK's main value add as the trade association for the tech industry is bringing people together, being that kind of independent, neutral voice at the center of the sector. So we will ask, what can we do as techUK, as government, as industry, maybe the kind of space clusters, to tackle this problem, this challenge collaboratively. That's a big value add of what we do here at techUK. And then the final section will be on the kind of concrete actions that is by far kind of why we're all here today, I think. Like what can happen in the short term, the short quick wins, maybe before the next election, and what can happen in the long term as well. We've got the National Space Strategy. There's lots more that we can be doing to invest in the right areas of the UK's kind of space finance ecosystem. So we'll spend 25 minutes on that last section. Then we'll have a Q&A. Opportunity for you to ask questions. We'll have a mic that we'll pass around for that. And then kind of another key value add of what we do here at techUK is the networking. So we'll go into the members area next door. We'll have be half an hour, it can be an hour, stay for as long as you want, have pizza, chat, and connect with some of the really interesting people who are in the room, on the panel, etc. So without further ado, I'm going to hand over to Heather to introduce herself and to give us a brief overview of the sector and where we are now from the UK Space Agency's perspective. Then I'll introduce our speakers, and then I'll go into the first part of this discussion, which is that recap on the strengths and weaknesses. So Heather, over to you.
Right, good afternoon, everyone. It's fantastic to see so many people here to discuss the UK space investment landscape and encourage more investment into the UK space sector. So for those who I haven't met before, my name is Heather Britton. I head up the Space Applications and Data team in the UK Space Agency. We have a number of remits. My team looks at running the European Space Agency's Business Applications for Space Solutions programme, which funds applications, so nothing upstream, no satellites being launched into space, but the downstream use of those data. I also fund and support internationalising SMEs and young applications companies in funding and offering their services abroad, and looking at supporting domestic SMEs in accessing that growth capital as well. So really happy to be here speaking with you today. I've been asked to say a few words about the space investment landscape and be a bit of a scene setter for those of you who may be less familiar with some of the problems the space sector is facing. It might be unsurprising for you to hear that some of those problems are the same as those issues experienced by deep tech, other deep tech sectors, so life sciences, AI, quantum, but there are some issues that are perhaps more unique to the space sector or more deeply felt by space sector organisations. The first thing I really want to note about the space sector is that it's growing, and it's really growing very quickly. I joined the UK Space Agency in 2022, and since then we've had an investment director employed by the agency. We formed an investment directorate, and we've also had catalysing investment listed as a key aspect of our value proposition. So it's really important for the agency to finance the sector and ensure that the private institutions are supporting us in financing the sector as well. Now, that's quite starkly different to how traditionally people see space and the public funding of space. Normally people think of space and they think of science, research and exploration, and that really is what we used to invest in. But now we're moving much more to supporting organisations and SMEs to become much more commercialised, and that's where that catalysing investment steer really comes from. As times are changing, we've seen investment grow in the space sector, but there's still lots of work still to be done. So over the past 12 months, between Q3 last year and Q3 this year, there was double the amount of investment that we saw over the same period the year before. So that's really positive to see. And between 2020 and 2022, the number of unique investors into space grew from 274 to 558. So we're seeing much more investors beginning to look at space for the first time. And one of my favourite stats is that 13 of the largest 15 venture capital firms and 8 of the largest 15 private equity firms have in fact invested in space sector organisations. Now, that's my favourite fact because I can guarantee that some of those organisations will not say that they've invested in space and will not realise that they're actually investing in space companies. The majority investors, particularly the more generalist and larger organisations, will not realise that the space sector is not planetary exploration and astronauts and rockets all of the time. A lot more of it is about what my team in the agency focuses on, and that's satellites and the downstream use of satellite data. So from navigation to Earth observation to communications and even to weather monitoring, all of those services are critical and actually support 17.7% of the UK's GDP. So are much more integral to the workings of the UK than many people often think. These services, but rather than being recognised as an absolutely essential part of our daily lives and the daily lives of every person in the country, space activity in the work of space companies is perceived as being really high risk, really technical and really capital intensive. Now, this perception of the space sector is quite damaging to space companies and the growth of the space sector. And that's because it's stopping them from getting the investment that they really need to thrive. It would be wrong of me to deny that the space sector isn't high risk and isn't capital intensive. It is. You only need to have looked at the launch from Spaceport Cornwall earlier in the year to see that things can go wrong. And many space sector companies do typically face higher upfront costs than other aspects and other deep tech sectors. And that's mainly because they need to launch technologies into orbit to demonstrate their feasibility. It's expensive to do launch, and no one's going to invest in anything that's not demonstrated or isn't demonstrated to work. Quite a good analogue for that is the life sciences sector, where you often see pharmaceuticals needing to go through expensive clinical trials before being able to be adopted and commercially viable. But these problems are not felt by every single space sector organisation, and even those who do have these problems, I think it would be incredibly short-sighted not to invest in those companies for those reasons. When space is so deeply embedded in our everyday lives and has the potential to help overcome some of society's biggest challenges, including, for example, climate change. I've spoken a bit about the criticality of the UK space sector. I'd like to also take a moment to speak about its shape. Now, the UK has a world-leading university sector, as I'm sure you're all aware, with 4 of the world's top 10 universities. Now, that leads to a thriving startup and spin-out sector and environment in the UK, and is in part responsible for the shape of the UK space sector, which comprises over 1,500 SMEs, which small to medium-sized enterprises, for anyone not familiar. Now, that's no bad thing. It's fantastic that we have so many space organisations growing in the UK, but it's become very clear that the UK space sector is a great place to start a space company, but not such a great place to grow one. That's something we'd really like to see changed. From a government perspective, it's something that we see as a weakness because it doesn't mean our sector is resilient. If one of the larger organisations fails in the UK, we really feel that across our supply chains. So the UK space sector is characterised as being very bottom heavy, with this disproportionately large number of SMEs and very few of these scaling up. And there's only really one prime recognised as being present in the UK, which is Airbus Defence and Space Limited. And there's even questions as to whether they're a UK prime really, because they are ultimately owned by a French company. Now, I completely understand that for many SMEs, being bought out by a larger organisation is a massive success and a great end goal for many entrepreneurs. And we're really pleased with the success of our innovative young SME landscape. But we need those companies to grow and begin to compete internationally in order for the UK to be competing on the world stage for those big space contracts and those big next breakthroughs in the space sector. Angel investors and VCs, I think, are beginning to get it. I am approached more and more by these early stage investors, and I think there's potential there that it's really starting to sink in, and they're really beginning to realise the benefits that the space sector has to offer. And there have been success stories. For example, just last month, Open Cosmos, a UK Earth observation company, raised 50 million in a Series B funding round. But we need to get the bigger investors interested in space as well and begin to grow companies that will pique their interest. So maybe we should begin to think big and start looking at private equity firms and sovereign wealth funds to begin investing, to get them to begin investing substantially in deep tech sectors and in space. At the moment, we lack companies of the scale that these large investment organisations would typically invest in, but that can change with time. But the growth capital needs to be unlocked first. Wider government actions, like the Treasury's announcement earlier in the year that they will begin engaging with schemes, pension schemes to support institutional investment into UK science and tech companies will help, but more still needs to be done. And finally, it would be remiss of me not to speak about some of the areas in which the UK is really successful and has a great space investment landscape. We are leading the way globally when it comes to active debris removal and sustainability. Space debris is a huge problem for the space sector. So there's many congested orbits, and satellites currently aren't removed from orbit. They're just left to float there when they're no longer in use. By leading sustainability and leading the development of regulation to remove some of those satellites from orbit, the UK can really be a world leader. And we're doing really well to start some of the work to get those regulations in place. For example, we're completing and currently creating an industry-led space sustainability standard, which is a framework of standards for measuring and managing debris removal. Another strength is the City of London, where we are today. we would be missing a trick if we weren't really to tap into the potential of those financial institutions and that excellent financial network. The city is a core UK strength, and we need to work with insurers and investors to develop leading commercial space finance capability to support the growing space sector in the UK. A couple more advantages that the UK has. We continue to pursue the goal of being one of the leading providers of commercial small satellite launches in Europe by 2030. We have a couple of launches coming up from Scotland. There's a spaceport being built in Sutherland and one in the Shetland Islands, and we're really looking forward to launches taking place from those two locations. And last week, we received the brilliant news that British astronauts would soon be flying, or may soon be flying, to the International Space Station on a private mission, following a deal between the UK Space Agency and Houston company Axiom Space. So in short, I think there's lots to celebrate and lots to do as well. There's a huge amount of activity in the commercial sector going on, but there's still more we can do, both in the UK and internationally. To quote the Minister in charge of space, George Freeman, space is competitive, space is commercial, and space is crowded. The future of the space economy will be decided in the next few months and next few years. There is a role for investors, industry, and government in making sure that the UK does not get left behind. I hope that's given you a really helpful insight into the space investment landscape in the UK, and I'll hand back over to Rory for the panel.
Amazing. Thanks, Heather. I'm sure that was very useful, bring us all up to speed. And without further ado, I'll hand over. So we'll go one by one across the panel, starting with Maureen, and we'll just say what we do, what our company does, and what our key interest is in the topic here today. I'll keep you all to 2 minutes, if that's okay, so that we can have a good discussion afterwards. But Maureen, over to you.
Hi, everyone. I'm Maureen Haverty. I'm a principal at Seraphim Space. Seraphim is a global space specialist venture capital firm with about $250 million assets under management, and we invest in everything from seed up to pre-IPO. And we, as we're global, we get to see the best companies anywhere in the world, and we're very much focused on a company that is going to be a real global international leader regardless of where they're from. My own background, I'm actually coming from the space industry. I spent 6 years in Silicon Valley. I was COO at a space startup, Apollo Fusion, which was acquired by Astra, the rocket launch company, for 145 million on the day Astra went through its de-SPAC. Spent a year in corporate development there, so really have seen a lot of the shifts in the space industry over the last few years.
Hi, everyone. Harry Morgan. I'm part of the investment team at 7% Ventures. We go a bit earlier than Seraphim, so we're pre-seed and seed. We're backing deep tech startups rather than space only. It's a bit of a cliche, but we always say we're looking for exceptional founders solving the world's biggest problems, but really trying to get founders through those key technical inflection points before they can go out and raise sort of a big Series A. My background, and as is consistent across the 7% team, is that everyone's founded a company before. Mine was in the climate space, but we were active across sort of network technologies, consumer technologies as well, and have been relatively active in space. We've got sort of 10 companies across our portfolio of around 100, directly in space, a handful of others as well that have got customers in the space tech sector, and are very excited by the UK sector as a whole, really. We're backed by the British Business Bank, so everything we invest in has relevance to the UK economy, and for us that's actually a strength. I think the UK scene is fantastic, especially when you look at the academic institutions, but I guess we'll want to talk about that in a bit.
Thank you for that, and it's a pleasure to be on this panel, and thank you for the invitation. My name is Manish Shah. I'm the Managing Director for OrbitFab UK and Europe. So we're a company focused on building the in-orbit propellant supply chain. We've conducted 2 missions in orbit already, one on the ISS, where we became the first private company to resupply the ISS. And we've also conducted a second mission that is a free flyer storing propellant in orbit today. So we're taking a step-by-step approach to building the technology to enable refueling in space. So we move away from this single-use paradigm, which we currently operate. It's kind of ridiculous, really. If you think about your car, if you run out of petrol in the middle of the motorway, Do you ditch it there and then go buy another car? Like, that's basically how we operate satellites today, and it's highly unsustainable. We're not really maximizing the use of those assets, and we're trying our best to change that. So we're a company founded in Colorado, headquartered in Colorado, and recently established our UK office. And my background is I was previously head of analytics at Bryce-Tech, helped set up the European presence for Bryce-Tech. Anyone heard of Bryce-Tech, by the way? Oh, good. Yeah, so leading space industry analytics company. And before that, I was at Inmarsat. Anyone heard of Inmarsat? Okay. Good to see our former colleague and CEO Rupert Pearce here as well. And yeah, I'm really excited to be discussing this topic. You know, at Bryce-Tech, I had the honor to look at some of the industry dynamics in terms of investment and trends, and pleased to be taking part in this conversation. So thank you.
I've got a lapel, so I'd echo that. Yeah, don't worry. I'd echo that message. Thanks very much for the invitation. So I'm Dan Terrett. I'm a co-founder at Odin Space, and you know, as Heather pointed out, there's an awful lot of debris in orbit. It's a worsening problem. The shocking statistic is that over 99% of the lethal debris in space is completely invisible. We just don't have the tools to track it. And at Odin Space, that's what we're changing. So we're mapping where this debris is and then using that data to help everybody from satellite operators, investors, regulators, insurers, anybody exposed to debris to protect themselves from it and manage that risk. And for what it's worth, this is what debris about the size of a grain of rice does to sheet metal. So you don't want that hitting your satellite.
Well, that's quite impactful. Thanks to our speakers for those introductions. We'll go straight on to the first part of the discussion, which is a bit of a recap of the strengths and weaknesses. We've covered a few of them already. So Heather mentioned sustainability and the being in the City of London. I mean, you know, we've got kind of a lot of existing financial knowledge and know-how there already, in particular in other sectors where they're kind of more mature, I think, than space. We've also touched upon academic institutions. But in your view, whoever wants to kind of pick this up first, what would you say is the one key strength that the UK has that you're really excited about that could possibly change the way that our space SMEs today access finance in the future?
I'll jump in there. So I think one of the strengths that I see, at least, and you know, part of the reason OrbitFab established a presence here is a very forward-leaning approach when it comes to certain topics in space. So in orbit servicing and manufacturing, there was a clear kind of direction of travel or statement, you know, be that through the National Space Strategy, but also it's not just about kind of making a statement, actually putting money where your mouth is and investing in a program like the Active Debris Removal Program. That's, you know, a huge statement to say, look, we're not just talking about this. We're going to put money to support sustainability in space and enable a better future in terms of how we operate in space. So for us as a company, we established our UK office after seeing kind of one of the requirements in the ADR program, Active Debris Removal Program, was that the chaser spacecraft needs to be refurbishable. And it wasn't specifying, it wasn't being prescriptive in terms of how it could be refurbishable. It just left it to the entities submitting bids. And in fact, everyone went for refueling, which is a good statement, you know, good thing for us. And it led to us establishing our office here as well, to, you know, off the back of that vision. So we see that trend line heading in the right direction, and you know, it's going to take iterative approach and for further technical development. But I think you've got to start somewhere, and you know, I feel like the UK's really started the firing gun when it comes to in-orbit sustainability, and we've seen other countries like Japan, the US take up the mantle as well. So yeah, we've got to lead by example, and I think that's what we're trying to do.
Absolutely, thanks, Manny. And Maureen, I wonder if I can touch upon Seraphim here. So you're based literally across the road, about 20 seconds away, but you're based in London and the UK. You're expanding globally. I think Singapore is the latest market for you. Why the UK? What is it that makes it such an attractive place to have a leading space VC?
Well, so first of all, we're global and have always been global. We have 30 portfolio companies, about 40% are in the US, 4 are in Israel, many in the UK, many in Europe, 1 in Japan, 1 in India. So why are we in London? A number of factors. I mean, the founders ultimately are from London, so that they set it up here. But we have an investment trust listed on the London Stock Exchange, and that's how we invest in our growth stage companies. And that's obviously unique to the UK. You can't have an investment trust investing into venture capital in the US. So there are a lot of nice vehicles that you can invest out of, and that's a reason to be based in the UK.
Okay, brilliant. And Dan, I thought I'd come to you as well. So Odin Space doing kind of crazy things and crazy technology, but also based not far around the corner from us. Small team, haven't been around too long as a company. I guess you could have kind of chosen anywhere to found this company.
Yeah, I think so. I think again, there's a degree of founder bias, right? We're both from the UK, but there are a lot of things that make it attractive to start a company in the UK. And I think some of the points that Manny was touching on about the willingness and demonstration at a top level of government towards sustainability, making funds available, that was hugely attractive for us as well. But I think the challenge that Heather highlighted around how you go from starting a company to growing one in the UK, there's a gap there and a challenge there. So, you'll see things like the SEIS and EIS tax advantages that exist, great for getting you off the ground. When you get to that later stage fundraising, it becomes limited, or certainly the appetite within the EIS funds in the UK starts to get limited in terms of risk scale.
Yep. Okay. And so, Heather, Maureen, do you want to come in on that? You're about to speak.
Yes, I think so. We often talk about the lack of growth investment available within the UK, and it is clearly a challenge. But I think there's also something about where it's not just investors' fault, there's also a fault of the companies. And that's, I think, a focus on 2 small markets early on the company stage. And local investors are often willing to overlook that, but international investors are not. And what do I mean about, a small market? We see everything in the world. We see literally every company in the world. And we notice something that happens a lot with British, French, and German companies, where there's too much focus on selling to their local markets. There's a perception that they can really achieve scale, a little bit encouraged by their local, government agencies, that they can achieve massive scale, focusing on their local markets. And it's just simply not the case in space. The space market itself is actually one of the smaller markets, and the vast majority of the market is within the US. And the massive advantage that UK companies have, which they don't take enough advantage of, is that as a member of Five Eyes, it's actually relatively easy for British companies to sell into the US market and even into the US DoD. And when they don't do that, when they don't capitalize in their market, when they go out to raise a growth stage investment round, which will be where they're being held against the top tier companies internationally, people will say you failed to capitalize on your market and you're tackling too small a market. And that really constricts the supply of investment for you.
Okay, thanks, Heather. Why do I keep saying Heather? Maureen. Harry, I was going to come to you. So Heather, in an introduction, mentioned that we've got 4 of the top 10, world-leading universities. You mentioned, the same thing essentially, and that everyone at 7% is a previous founder, and obviously the link between universities and founding a company is, quite significant. Would you say in the UK that we're converting that leadership in kind of the academic side of it into effectively converting that into startups and good space SMEs, or is there kind of a disconnect between the two?
Probably not. No. I think there's a bit of a misconception. I think that you've got founders coming out of universities without the ambition that you'd find from a US founder, and I think to what Maureen was saying, part of that is because there is a focus on smaller markets, and I think that obviously has a knock-on impact on how big those companies do become. Realistically, I think it's an ecosystem that I don't think encourages that path of least resistance, right? If you're looking at UK tech transfer offices, they take 4 times the amount of a company compared to those in the US, and double the amount in Europe. And if you're taking that much of a company so early stage, you're really disincentivizing investing as a pre-seed seed investor, and you're certainly de-incentivizing investing at a later stage. We've seen companies investing sort of seed plus or Series A rounds where half the company is owned by investors, and it's not giving founders the freedom to run their own companies. Same with UK tech transfer offices taking seats on boards and steering companies in the direction away from expanding into international markets. And that's been a real problem across loads of our portfolio companies. I mean, there's been 3 in the past month that have flipped to US topcos, purely because of the fact that they can't find the path of least resistance in the UK market.
Okay, that's pretty concerning, and I think that's something we might touch upon a bit later in the discussion. Dan, I think last time we spoke, you said something that kind of caught my attention. It was that, with such a small team and hopefully, expanding soon, you have very limited resource to take on multiple things at once, and you have to prioritize perhaps even more than SMEs in other industries, because space, long time horizons, a lot of uncertainty, the need for a lot of funding and early. So this reminds me of a very good report that I'm sure a lot of you have read on the size and health of the UK Space Agency 2022, so published last year for the UK Space Agency, that said that the main barrier to investment for space SMEs was a lack of internal resource. And I'm sure this is something that you feel quite passionately about. You said, you're submitting bids at the moment, and it's, do I do A or do I do B? How does that affect a company like yours kind of tangibly in kind of everyday decision making?
Sure. I mean, we're hardly unique in you have to make resource trade-off decisions. Our strategic approach has been to try and do as much as we can with as little as possible. So we have managed to get our tech working in space and launch first kind of early traction generating product, all for less than £1 million. So, we've achieved quite a lot with relatively little. But that does come with big downside, and that downside, to take, for example, the expanding to the US market, or at least exploring that opportunity, that's a trade-off versus going for a non-dilutive funding grant opportunity here, or going after customers, or developing a study, an impact study, say, for the European Space Agency. You're left in a position where you can only do 1 or 2 of these, and where the outcome is not necessarily related to the activity, or not, the link between the two is not necessarily concrete. It's a challenging trade-off to balance all the time. So you spend an awful lot of your time trying to decide, and then trying to really go all in on whichever opportunity you've gone for, and then pivoting very quickly depending on what the outcome is.
Yeah, that makes sense. Okay. I've got a final question for the panel before we move on to the second part of this discussion. And Heather, I'd like to come to you. So obviously we've got a national space strategy, which, as I hear from members, not every country has, and we're very lucky to have one. Also, I hear. But, granted, that's not enough in itself. And perhaps there's a lot more that government can do on the back of that. We've got the National Space Strategy in action that was helpful, I think, from what I hear. But Heather, I'm wondering if, are there, do you think, plans for far more to come from this strategy in the future? Is this an area that, is it going to evolve over time, and kind of how do you see that playing out? Because ultimately, unless that kind of captures investment and the issues we're talking about today in a kind of meaningful way, then that kind of central coordination and leadership may be lacking.
Yeah, thank you. It's working. So thank you for mentioning National Space Strategy in Action. That's our recent publication that almost updates on progress against the National Space Strategy. We are aware that currently investment into the space sector, at least from government, is kind of scattered thin and far. So we don't invest substantially in many specific sectors. We kind of fund everything a little bit. And that's often cited to us as a bit of an issue. We really need to pick where we want the UK to be leading and put a lot of money behind that rather than drip feeding investment everywhere. We are in the process of completing a document which is mentioned in the National Space Strategy in Action, space. It's called the Space Sector Plan, and that is essentially intended to set out what capabilities we want the UK to have and to develop, with the aim of ultimately being a bit more strategic in where we invest and being a little bit more like the MOD in thinking about capabilities and what capabilities we want to develop, and therefore having a longer term investment plan associated with that. We obviously need to get through future spending reviews and get more money into the space sector, both from private investors and from a public perspective as well. But we hope that will help us be a little more strategic. And that's kind of the next step in reviewing what's going on with the National Space Strategy. And it's the next publication up until its deadline of 2030.
Brilliant. Okay, more publications to come. That's always good to hear. So we'll move on now to the second part of the discussion, which is responsibilities. So as I said, techUK brings parties together to have conversations that maybe otherwise couldn't really be had. I think a large part of this is what more could government be doing? We've kind of heard about it just a little now. VCs as well. We've got about 50 space VCs in the UK, but much larger ones as well outside of space. Where should that dialogue happen? What education kind of piece can the larger VCs do to the space ones, or vice versa, to scale up the ecosystem? I'm quite interested in the views of the panel on this one. So in terms of working together to kind of to improve access to growth capital for SMEs collaboratively, maybe Manny, I was thinking, could start with your experience on this issue.
So was that just regarding VCs or across all government VCs and industry in terms of across? I'll answer across all. In terms of government, I think the additional actions that can be taken include contracts. So for SMEs, grant funding is great. It's really good for tech development. But, firstly, as a startup, you have a limited amount of runway, and match funding is a factor in the grant funding, but also the timing of funds coming in can be a challenge. So there's no payment on kickoff, for example, and that means that you may end up waiting a few months until your first milestone, and that can eat in significantly into your runway. So I think that's really important if you want to encourage the growth of SMEs, support them through that life cycle, and by having contracts and encouraging investment in the domain. So certainly contracts might not be great for across the board. Then I would say contracts are a good approach for areas where government can be one customer among many. So kind of like how in the US, the commercial crew and cargo program is a good example of that, where the US uses the SpaceX Dragon crew and cargo vehicles for missions to the ISS. And with SpaceX's Crew Dragon vehicle, there are other customers of that, including other international governments. So that's a big kind of example to give, but I think we can scale that to smaller scenarios as well, including missions to remove debris in orbit, as well as refueling. A couple of examples that come to mind. And then in terms of VCs, I think something that VCs could improve on is, when we go and look for funding, and this was from my experience having been involved with our Series A, which we completed earlier in the year, the disparity with which VCs operate is quite staggering in terms of the due diligence process. So at the very least, having clarity from the VC upfront on the due diligence process would go some way to help have a clearer idea on how long it might take. Timelines can be a challenge there as well. And then in terms of industry, I think I would say three things: execution. Like, it's really, really important to continue to execute on the plan at pace, and you're going to hit roadblocks and you're going to have to pivot, but really important to keep on kind of moving forward, so, and quickly. Thanks.
Brilliant. Thanks, Manny. You mentioned VCs. I think let's kind of steer it slightly towards the VCs in the room. So maybe Maureen, do you have a take on how the UK is doing generally in terms of VCs supporting or working with government and other actors to kind of improve the system as a whole, outcomes as a whole?
I think you're definitely seeing more VC investing into space in the UK, even from local UK investors are definitely trying to increase their exposure to the space sector. I think one thing, this doesn't exactly answer your question, but I think it's really important to get across. One challenge that we as VCs have, and I think companies have, is when government agencies give grants rather than contracts. I think that if you as a government agency don't want to buy this product, what makes you think that a commercial customer will? The hygiene test of whether this is actually a good business is whether you want to buy their product or service and then whether they can deliver on that. And when you're giving grants, you're making a lot of assumptions about what the market wants. You're making a lot of assumptions about whether the company can deliver, and you're just giving them grants. And I think it can have this really distorting effect on the market, where you can ultimately end up with almost local champions that have been decided on by government agencies rather than the markets. And what we as VCs are trying to find out is what the market actually wants. And we use contracts as a really good indication of that. And that's one of the factors for why we actually discount grants almost entirely. When a company comes to us and says, I have a grant, it's like, so what? It doesn't tell me anything about you as a company, or your contracts do. So that's what we want to see more of from government.
Yeah, okay, that makes sense. Yeah, Harry, do you have any thoughts on that? And kind of also maybe the distinction between the deep tech stuff that 7% does a lot of versus space in particular, and maybe its more unique characteristics?
Yeah, I think just to follow on from what Maureen was saying, I think probably the biggest reason we pass on some of the space tech companies we see come through our funnel are that we're seeing solutions looking for problems rather than problems looking for solutions. I've got that the right way around. Anyway, I think that is a function of having an ecosystem where you've got these grants and sort of anyone can raise some capital based off a compelling pitch to a grant funding body rather than someone looking for a customer, right? I think really as a deep tech VC, it's the same across space as it is in things like quantum and in AI. We need to sort of shift the focus that the UK VC landscape has had on sort of B2B SaaS solutions, where it's iterative, fairly low capital, not very capital intensive, and really define what like hard tech is. And space by its nature is going to be a hard tech solution. We need to, at pre-seed especially, have larger funding rounds, accepting much lower dilution, so that we can get these companies that are pre-seed stage through to those key technical inflection points without having to raise a seed plus, a seed plus plus. I was looking at a company the other day that was a 4th seed extension. And that's hardly a good indicator to a Series A, Series B investor that you know how you're going to manage your finances going forward. So I think really it's about VCs taking on that risk and assuming that if this takes off and this UK company can take hold of something in space debris management, that this can be a $100 billion opportunity rather than a $1 billion opportunity that might be in the UK or the European markets.
Okay, brilliant. Going to pivot slightly, and I think a topic that a lot of people in this room will be quite interested in is skills and talent. And we hear across emerging tech that it's a huge area of kind of should be a huge area of focus for the UK, and we're lacking in a lot of respects. So Heather, maybe touching upon, we've said national space strategy, work to come, skills and talent. What is the kind of the UK Space Agency's approach there, and is there a collaborative approach that maybe you're considering to kind of help the whole kind of ecosystem with that?
Yeah, thank you. We obviously think skills are really, really important, and there is a lack of skills in deep tech sectors across all those sectors, not just space, and it's not a problem only felt by space. I think the benefit that tech can really bring to space organizations is from my perspective as an applications lead, we want to see more companies picking up the insights from space data. And I think space data is often a bit obtuse and opaque because you don't have someone converting the raw data into insights for companies. I think better links with academia to produce those insights from the data itself would be really advantageous and help non-space sectors adopt space more. And we could see a massive growth in the space economy because of that, if we have data from space being adopted more by other sectors. In terms of actions the UK is taking and UK government are taking, I'm not from the skills team, but I'm aware there's a lot going on. There's, again, I don't want to just point to other upcoming publications, but there will be a section on skills in that. We've recently completed the Space Skills Survey, I believe. So we'll look at insights from that as well. But we're aware it's a really important area. And I think there's also a role for industry here as well, right, in training up some of the really great PhD students and postdoc students we have coming out of universities. We see so many of them flying off, and partially that's because of the long-term nature of many space missions and contracts these days. It's if you don't miss or if you don't get the big space job in your area, sometimes it can be a very long time before you get another one. But I think by offering more training in industry, it helps bridge some of those gaps between those really big missions we're starting to see, and we can support skills better that way.
Great. Okay, that's encouraging. The final kind of point from me on this is we're talking about responsibility and the question of kind of who from the range of stakeholders across government or across the UK can help and in which way. I think one thing we haven't touched upon so much is beyond government, VCs, industry, all sorts of organisations, techUK being one of them. But space clusters is another big one, and there are lots of fantastic things going on there. Satellite applications catapult, to name a few. London Space Network, which I know Manny's involved in organising informal meetups, that sort of thing. So are there any examples of best practice that any of you have seen in terms of kind of pooling resources and collaborating on tackling this kind of growth challenge that space SMEs might face?
Since I've got the mic, I'll come in quickly. I mean, it's quite an easy point to make, but events like this, I spoke a lot about the perception of space being quite damaging. I think the more we can do just to spread awareness that space isn't just rockets and Star Wars and is actually, the work of satellites and underpins so much of our economy, and that really is the future. Like, we're talking about lunar communications, we're talking about new platforms in orbit around the Earth. It's going to be the future, and the quicker investors realise that, the more we're going to see the growth of the sector in the short term. But I'll pass on to others.
Thank you. So aside from London Space Network, which I recommend folks to come along to, it's an informal monthly networking drink in a pub. There was recently a Rise Together event, which I was fortunate to be on the panel on, and I managed to attend one of the session there. But I thought that was a fantastic event where they brought together people from diverse backgrounds who have managed to kind of work in the space industry, pivoted throughout their careers and figured out how to make it into the space industry. So there's loads of examples of people out there who, want to come into the sector and just don't know what paths there are. So, and I feel like there is an opportunity there to open the sector up to those people and let them know that there are opportunities beyond, astronauts and rocket scientists, etc. I think we need to encourage that in whatever way we can. Not to say astronauts and rocket scientists aren't good, but there are a lot of opportunities in the sector, and we have mid-career kind of brain drain in a sense, where people end up going into other sectors for various reasons. So we have an opportunity to fill some of that gap by bringing in people from other industries as well. Absolutely.
Anyone else want to come in on that before we head to the final section, which is really, I think, the reason why a lot of us are here, and that will add the most value to the session, which is the concrete actions that we can take, both in the short term, quick wins, nothing wrong with a good quick win, but also longer term, building on the national space strategy. It'll take investment, skills, all these sorts of things take time. So with that in mind, the question is, what are the quick wins and the longer term action that you think might be required to kind of shift the dial on this kind of growth challenge that space SMEs seem to have? Any immediate thoughts?
I'm going to give something for companies because, focus on what you can do and what's within your own power, and it's win as many customers as possible, and increase your outreach to customers and stop acting or thinking as though because I haven't reached my full technical product, I can't win customers. You can get your product at a very nominal, you could give your product away for free to get a flight test if you need that. I know lots of startups who are doing that effectively. Start your outreach and go out and hit up absolutely everyone in the industry and start chatting to them about potentially being your customer, and concentrate on just making yourself a really, really healthy business, and then go to investors. I've spoken to a lot of people, I talk about, focus on the US market, and I really strongly believe that. People then worry about how do I do that without being a US company? The best way to do that, the best way to do anything for your business that you want to do eventually is do it now before you start talking to investors. Because if you say you're going to go to the US and get a US market or US customer before you talk to investors and they have it and you don't have it, they'll say, well, clearly you're going to actually have to move to the US. But if you've already started winning US customers before you talk to investors, they'll say, okay, carry on. And that would be replicated across anything you do, is start doing now what you ultimately want investors to back. And they won't try and change direction for your company as a result.
That makes a lot of sense. Any other thoughts on the quick wins, Harry?
I mean, I'll just add to that. I think raise off execution rather than LOIs as well. I mean, there's a lot of startups in the space tech industry who will sign an LOI in return for an LOI, and it is pretty transparent, right? It's far. I'd much rather see in a pitch deck sort of evidence of execution and evidence of a prototype and the performance of that and how that solves the problem you're solving, rather than look at this pipeline of LOIs that we have of companies that might not exist in a year, 2 years time. Yeah, I mean.
Great. Manny, I mean, Orbit Fab is a company that's raised money in the US, in Europe. Is there anything that really bugs you about how things happen in the UK, where you think if only we could take that one learning, or that one thing, that the mechanism that works really well in one of those markets?
Yeah, I would say I think it goes back to the contracts thing again, because we see that a lot in the US, is a lot more willingness to put, take risk and put give contracts to small companies where the capability has not been fully proven or tested. The market is unknown and there's uncertainty there. So it's really about that kind of risk appetite is quite good there. And we should try to take lessons from that and be willing to, put ourselves out there and I'm thinking about this in terms of government decision makers who may be hesitating to take those risks for avoiding any major Daily Mail headlines, for example. But I think as an industry, we can't really be successful if we're not able to put ourselves kind of forward, and government needs to really take the lead on that in a lot of the cases.
I think just building on that as well, what we see in, say, the US will be a smaller contract, and then when that's executed against a follow-on bigger contract, that structure, at least in my experience, isn't necessarily there, or that appetite isn't there. So kind of building on Manny's point, high risk appetite for maybe a much smaller, few £100,000 sort of territory contract that then leads on to further ones if the further stages or further tranches if the execution criteria are met. That would be very helpful from our perspective as, we try and build out our technology towards a solution that makes a difference.
Yeah. Okay, brilliant. Heather, I'm going to come to you as you thought I might do. So I was at an event last week with the Space APPG, got to ask Minister Freeman a question, and that was about what more can we do? What are the quick wins? He said, mansion house reforms, brilliant. We can piggyback on the back of that. It's all about de-risking investment. I think that makes a lot of sense. DSIT, UK Space Agency, we're looking in the next 6 months time horizon, what is it you really want to get out the door that you realize there's this maybe big gap for kind of supporting space SMEs? Longer term priorities aside, what's really on your mind in the shorter term?
It's a good question. I think I've mentioned some of the points before. We're trying to get our priorities out there, make those clearer. I think we can do more probably to communicate, as I've said, the benefits of space, link investors up more with businesses. I think we could do more to encourage businesses to speak the language of investors. We get so often really knowledgeable academics speaking to investors, but they just speak different languages. They don't look at the market share. They look at the fantastic innovation that their space tech has, and that just isn't going to speak to the big investors, especially those without a space background. They might be okay with Seraphim, who understand space a little bit more, but if we're really looking to unlock those larger aspects of growth capital, then I think we need to look and translate what academics are saying, or the academic way of speaking, more to what investors understand. And at the Space Agency, we're looking at how we can make those connections and do more education programs, both for investors actually and for academics, to try and tie those things together and make those links a bit better. I do also feel the need to respond a bit on the grants point and the contracts point. We understand contracts are better, essentially, and are perceived as being much more effective by investors. We're looking at ways in which we can invest a little more creatively and innovatively, and that means, even exploring, like, is there a way that government should be looking at things like equity a bit more, or challenge funds a bit more, and just being a bit more creative. Historically, contracts have been difficult because you need quite a specific user need, at least according to government contracting frameworks, to procure anything. And we want to allow the innovations to come to us. So we fund that whatever looks most innovative and exciting without having to define the criteria quite clearly beforehand. So that's historically why the UK hasn't been using contracts really extensively. But the way in which we do offer contracts is through the European Space Agency. So programs like the one my team runs, the BAS program, and ARTES, which some people might be more familiar with, result in contracts with the European Space Agency. So although they haven't got UK Space Agencies and UK government's name at the bottom, you need a UK authorization of funding letter to get those programs. So it is actually provided by our funding. Just felt the need to defend that stance a bit. Thanks.
Absolutely. No, that makes sense. Harry, I wanted to come to you. As a VC that sits across deep tech and in space as well, where do you see the VC landscape in the UK in terms of, is there a bit of an educational piece maybe that needs to happen to bring more VCs on board in the space investment landscape, or do you think we're kind of going at a good pace and leave them to it?
I don't think we are going at a good pace, no. I think it goes back to talking about how the VC ecosystem is put together in the UK, and it's a lot of, and I'm not trying to criticize anyone, but it's a lot of MBAs and ex legal professionals, and they're great at what they do, but there's not enough operators especially at the early stage in VC. And I think when you're trying to understand the difficulties of a hard tech company at pre-seed stage, it's very difficult to convey that to someone who's not been through that journey. And helping to build, you really want to onboard the best VC partners you can at that early stage to help build those resilient business models that will get you through to that Series A. So I think that from what VCs can do differently is something that I think is bringing more operators into the table, or certainly into the advisory boards as well. You don't want to have just like a random graduate on your board. You want it to be someone who can add value. I think going just back to what you're saying around the Mansion House reforms, and just to clarify that for anyone in the room who doesn't know, that's an initiative from the UK government for, I think it's 5% of pension money in the UK to go into VC by 2030. It's great, and we saw last week a bunch of VCs that were part of a coalition that was targeted towards that. I think what we really want to not see from that is it to go to sort of the usual suspects and all the money going into sort of business as usual within VC in the UK. We want to see that targeted at specific verticals and strategic verticals where we have sovereign capability and really strong academic IP as well. So be that those funds then spinning up fund-to-fund programs, or be that or just changing who you're targeting with those funds, backing emerging managers with specific domain expertise in space tech, in quantum, in AI. That's what we want to see. And I think that's probably something that we're worried isn't going to happen based on the list of those investors that came out from that report.
Okay, that's interesting. Maureen, just building on the VC angle, you say Seraphim, global company, although headquartered in London. And so I guess you see a lot of examples of best practice from across the world. Are there any that you think the UK should, you're really keen for the UK to adopt now and early, and it makes absolute sense to do so?
What I'll talk about, again, I'm really big on what companies can do themselves. I'll talk about our portfolio company, ISI, they're the global leader in synthetic aperture radar. You probably will have seen their images on front page newspaper during the height of the Ukraine conflict. They have a US competitor called Capella, but they have completely blown them out of the water. And how have they done that? They went to the US early. They're very much still a European company. They have 500 staff, mostly in Finland and in Poland, few staff in the UK, and they really have a much smaller presence in the US. They've managed to stay completely a European company, selling into the US DoD and into international defense customers as well. And what did they do? They went reasonably early. They didn't wait until a US growth investor told them to go to the US. They invested early in selling into the US and have worked a lot on that. So it's definitely, it can be done. But I'm very confident that if they had waited, if they'd waited to go to the US, we have other portfolio companies who waited and then approached US growth investors. US growth investors probably would have made the founders and the entire company move to the US because that's the only way they could envisage it happening. And that's what I would again just say is go try and access your markets as early as possible. Don't be forced to do anything by investors.
Okay, yeah. Some good wisdom there. Dan, Manny, any thoughts on the experience of a space VC in the UK? We've talked about a few of the kind of shorter term things that you'd love to see early on. Is there anything that not concerns you, but you look to the long term and think it'd be great if that was in place by the time we scaled as kind of forecast? I mean, skills is one that we hear time and time again. You want to have that kind of consistent pipeline and confidence that you can get the skills you need when you need them. Is there anything else around finance, funding, or growth in general that comes to mind?
Sure. So I think the overwhelming experience we've had so far is the differing starting points, I think, from when we speak to UK-based VCs, Seraphim excluded, but versus, say, speaking to an American VC, just the appetite for risk is just orders of magnitude different. That is an inescapable fact, even if you have some level of technical progress already, some level of commercial progress already. The reality is that the space sector as a whole, and certainly in orbit service and manufacturing and the related services that are evolving around that in the space economy, which is obviously where we operate too, that is an emerging market. We're at the very early part of a very sharp growth curve. You have to have a certain amount of risk appetite and a certain amount of vision as to where that's going. To answer your question, how you bring that into the UK, I don't necessarily know how you would encourage that. And I don't necessarily know that it's an issue if you're able to attract that global investment into UK companies. If that pipeline from global investment in is robust, then it's, in my mind, not necessarily an issue. But yeah, it's certainly a marked difference between UK investors and American investors in particular.
I would say the scale of funding would be great to have. Obviously, it's a pretty long shot, but things like having pension funds invest in LPs in VCs is a great opportunity. Hopefully that comes to fruition and moves forward in the right way. I don't know what the scale of pension funds in investment in the US is, but it's definitely more than it has been in the UK. And maybe Maureen, you can answer that. But yeah, I'd love to see more funding in the UK. And having looked at some of the stats on this in terms of space, the UK is the second in terms of total global space investment. So we're a great position, but I think there's a long way to go to take that further.
Maureen, did you want to come back on that?
Yeah, I think it's about 20% of pension funds, or up to 20%. So the biggest LPs really in venture capital funds tend to be the Ontario Teachers Pension Fund, California Public Pension Fund, and then there's a lot of the universities have enormous endowments, like absolutely would blow Oxford's out of the water. And then they're very heavily tilted towards VC, 20-25%. So the total funding, I believe, available from pension funds in Europe as a whole is equivalent to that in the US. It is, I think it's about 2 trillion. So if even a few percentage points were unlocked, that would really have a very significant difference on European investors and obviously the equity, the growth capital available for European startups.
So yeah, just to highlight the scale of that disparity between, I guess, like the UK venture ecosystem versus that in the US, it's 16 times more funding goes from pension funds into like LP/GP structured VC funds than it is in the UK. So it's a pretty substantial problem, and 5% by 2030 is a pretty good start, but it's way off like the 20% that you see in the US.
Okay, very interesting. I want to touch upon a final point that maybe a lot of people in the room are thinking about, and that we hear time and time again at techUK across emerging technologies, and that's the pure scale of investment that we might see in other, we see it in semiconductors and AI in the EU and the US in particular. Kind of they might commit 30 billion, we might commit 1 billion. And industry has a bit of a mixed view about this. Some say, well, we're building upon our strengths, and so there's no point throwing money at it. We're world leaders in areas of these technologies already. Let's build upon that. Others say the levels of investment simply aren't enough. Just quick thoughts from the panel. I mean, where does space come into this? Do you think that the amount of money we're putting in it's okay, it'll do, or do you think that it's kind of, as we hear across emerging tech, maybe not enough?
I think, more is always better. I think I would very much encourage that. I think my comment would be very much that there are certain areas where we've expressed an interest in leading the world. Space sustainability is one of these. There is a lot of relatively low investment areas where we are pushing forward. So the Earth Space Sustainability Initiative, for example. But ultimately, it needs to be backed up by something tangible in the form of money as well. Investment in contracts, investment in grants. And I think you see, for example, the entire NSIP fund this time round is in the region of 60 million pounds, the first tranche, which is we're going after at the moment as an industry. And then broadly in the same week, there's an announcement that Japan is investing in the region of 80 million in astroscale for debris removal. So whether we're leveraging that UK-Japanese relationship to push forward a joint initiative to clean up space, that is a good thing, but you can't get away from the fact that the numbers are much, much larger.
So polite.
Yeah, I think if you look across any kind of investment that the UK is doing, it very much seems to be peanut buttered across a wide variety of sectors, which means that ultimately any one sector does not actually get that much investment in comparison to international investment. So my personal preference would be for much more targeted, more meaningful investment in specific sectors. Problem is, obviously, if you're in a sector that's not a national priority, then that means you're going to get nothing, and we need to make careful decisions about, is that what we want? Then I think within space, within a sector, you probably need even targeted investment within a sector in an area that you have a strong advantage in, whether that's because you're much better, or because actually you think that other countries are underinvesting or not focusing on it enough, taking advantage of underinvestment. Heather's touched a lot about the downstream applications, but we probably haven't talked about it enough in the applications. That's an area where the UK is actually really has a strong advantage. Selling into the financial services sector and selling space data applications and products into the financial services sector is clearly a huge potential area for the UK, such as stress testing your assets against climate change risk, We're starting to see an emergence of that, carbon credit verification, validation. The UK actually has a huge advantage, and that's an area actually which is not popular, not well funded, not progressing in the US. I think there are some areas that could be ripe for further investment.
I would just add that, maybe bring a dose of reality in terms of the current economic environment we operate in, where you've got high interest rates and the pool of capital that's going to be deployed to high risk ventures is shrinking, I believe. So we're also competing with other industries that are maybe better marketed, better understood, and so I think as a sector, we've got to take that context into account when we approach VCs and try to convince them to put an investment in. So yeah, it's a really challenging environment. As a company, we raised about 30 million in April earlier this year, and that took us several months longer than we were hoping, and that was largely due to the environment we're in. Lots of uncertainty, lots of challenges. So just to bear that in mind.
Yeah, thanks. And I think Manny's touched on a really important point there, in that we are competing with other sectors, but the more we can articulate that space is almost like AI, underpinning lots of other sectors and underpinning our economy, then the more investment we can hope to get. I think there's some problematic language around just considering the space sector as a siloed sector. We actually a huge advantage by the fact that we support so much other work, and if we can get those sectors to invest as well, then we can build up our wallets and pockets.
Absolutely. Well, at techUK, we've got 23 different programs across health, defence, national security, and space touches upon all of them. And so we'll be doing a lot to promote space as much more than space, and it'd be great to have as many of you involved in that work as possible. So I think that's not the slide. It'd be good to go to a quick Q&A. Try to save as much time as possible for this. We've got about 15-20 minutes. So anybody has any questions, stick up your hand. Laura, my colleague, will kind of pass around the mic. Use this mic.
You're very, very, very interesting. Not being from the space industry, but from commercial world in general, I hear a lot about very targeted innovation and yet broad reach in terms of different sectors, industries, investors, markets. So is there a scope for VC to encourage these startups to use these solutions for other applications that may be easier to get demonstrable benefits on land, on sea, rather than all on space? And also from the government, since there is such an impact and focus on sustainability, apparently with the innovation and the development here, to club up with DE&Z and the agenda for net zero, and see again different applications and how one could have more bread and butter type of revenue and activities, and then the space specific elements to it.
Thank you. Does anyone want to take that?
I can take the government side just first off. Just to say, yeah, climate is a huge thing that space can help benefit, and we have a number of, not just the UK Space Agency actually, but there'll be a presence from a number of space agencies at COP28, so the climate conference coming up, and we think that's really, really important. So yes, we are speaking with DESNZ. I think part of the work we can do as the UK Space Agency internally is to really get the message out to other departments and speak internally about space, especially with an SR coming up. And try and get their support for some of our space initiatives. So yeah, we're absolutely following that up. But maybe I'll turn to some of my colleagues for the rest of that question.
I guess, yeah, to the point on like transferring stuff from Earth to space and finding, I guess, a ground-based go-to-market before going up to space. I think I should point to one of our portfolio companies, which is Interstellar Labs, which isn't actually a UK company. But if you look at the requirements for a lot of these things that are going to be put up in space in 10, 20 years, some of the benefits of those in terms of space requirements are very transferable to Earth. For example, Interstellar Labs is developing a biopod to develop very specific, or to grow very specific form of agriculture in space, on the moon, on Mars in the future. They found a very, very specific go-to-market in perfume companies as an initial point of contact, where they can grow these very specific crops at 98% of the soil requirement. So if you can find those Earth-based go-to-markets and build some traction on that front, still with that large-scale ambition of taking that to space and building yourself as a key player in that space economy, then I think that's almost the perfect way of building a business, right?
Brilliant.
I'll add another example there. Heo Robotics, they're a company that's has no in-space assets, at least as far as I'm aware, or historically haven't. And they were able to use existing Earth observation satellites that are providing services for agriculture and a whole variety of applications, terrestrial applications. They were able to use those assets and the sensors on board, imaging sensors, to point the spacecraft the opposite direction. So in order to do direct observation of assets in orbit, so all kinds of imagery capability there. So it's that kind of thinking through, what is already out there, how can that be reused in a different way is also, another way.
Absolutely, brilliant. Any other questions?
I'm Steve Berry from Angoka, a graduate of the Seraphim Space Camp program, which is excellent. And I say that because I'm about to ask another question about Seraphim. So we've just talked about how probably the City of London is the last place on the planet Earth that you would list an emerging technology company right now. So a good example of that is the Seraphim Investment Trust, trading at a 70% discount, one of the highest in history for an investment trust. So can you give us some background? Because Seraphim's a very good company, but somehow the investment trust and the ability to invest in space is not recognized by the city.
Yeah, thank you for the question. Actually, yeah, it's tough numbers, I think. So overall, investment trusts are down in general, and in particular, ones that invest in venture capital and private equity are down. So what are the reasons for that? So high interest rates are driving people away from higher risk investments. You can get a return for no risk right now, so that's driving it away. So that's one contributing factor. If you're investing in private equity and venture capital, you also have a liquidity discount. People are worried that if your underlying portfolio of shares goes down or underlying portfolio of assets goes down, you can't sell them. And then there's also a factor where people are worried about the valuations and runways because it's private equity or venture capital, the valuations are pretty opaque. So once you add in those 3 or 4 factors at the moment with, general low confidence in the UK market at the moment, so generally shares are down, that's leading to some fairly significant discounts. Why are we then? And then when you add that on top of that, we invest in space and we invest in venture capital as well. So we've got an additional risk discount at the moment as well. So definitely it's really, definitely it is really challenging. We're confident in our valuations and we're very hopeful that when the market conditions improve, will start to go up again. So when investment trusts in general move up, we were just chatting about it last week, and that even if we had amazing news from our company, even if we sold someone at a massive, profit, we probably wouldn't see much benefit from it, probably, or certainly not long term. We might have a bit of an increase, but nothing relative to the actual true performance because investment trusts are down so much. So, yeah, I think also, yes, I think UK markets, we think, are quite a challenging place for high risk investment. The UK investors have lower risk tolerance, and definitely that's why our investment trust, that's Series B plus, because we couldn't have space and early stage because the risk would just be unpalatable for UK investors.
Brilliant, thanks. We have another question. Go ahead.
Hi, this talk was absolutely amazing. Thank you very much. So I'm actually the founder and CEO of a solar service company. And my question is, what do you think the future of solar beam energy would look like? So we already have solar panels on Earth, and it's an amazing form of renewable energy. However, solar beams in space, essentially solar panels in space, would be much better as the sun doesn't set in space, right? So how do you think that this could revolutionize the renewable energy industry, and where do you see it going along?
Thanks. And I think there's a question in there about long-term time horizons when it comes to investment.
Yeah, sorry, I just would love to jump in because I find the sector really interesting. At Seraphim, we're really enthusiastic about that sector. A lot of technical challenges there, and also a very high capital needs. So for any of you that don't know, basically the idea is you'll have satellites or vehicles in space with massive solar panels, and then you will beam solar power back down to Earth. There's loads of different technical trades you can make, including whether you beam back down to dedicated rectenna using microwaves, or whether you use existing solar farms using lasers. I personally find that quite compelling because lower capital requirements. The big challenge is that those vehicles in space and then potentially the rectenna are going to be extremely expensive to build. And I think my main concern about that technology is that for first of a kind, so the first commercial unit that gets deployed, that almost certainly won't qualify for infrastructure investment, which would be something that you could raise different investors. That's the case for any new electricity generation. Any new first of a kind. Nuclear suffers from the exact same problem. There are just no investors. So you've probably gone beyond growth sector investors in terms of the capital requirement, but you're not low enough risk for private equity, for infrastructure investors. And I think that's the real big challenge. So extremely excited by the technology, concerned about that, and then concerned by the number of dilutive rounds of capital that are going to be required. So there's loads of interesting companies there, and none of them have solved that problem for me yet. So I think that's why we have not made an investment yet.
It's really interesting, and something we might actually do something on at techUK, because that is a really interesting challenge to solve. Another question. Laura, feel free to pick.
Hi, Dave from the Civil Aviation Authority. We've had George Freeman out over the weekend talking about investment in RFA, visiting Saxford. We're looking ahead to that next UK launch. It's probably going to be quite a high profile event, get a big amount of media coverage. How does something like that, both if it's a success or if it's a failure, how does that affect investment from public sector, private sector into UK space?
From the public sector's perspective, I think we have a very good understanding that space is very, very difficult. Like, we know the risk involved. We've seen plenty of launches fail, and we know that's real risk, especially having seen the Spaceport Cornwall launch, not fail, we don't say, but didn't reach orbit. It was great that we had we saw the regulation be successful, and we got everything up to launch working. And I think that will be really advantageous ahead of the Saxford launch, for example, as well. But yeah, it definitely damages the reputation, I think, from an outside of the space sector perspective. People looking in think, oh no, if it was to fail again, or if the second launch was to fail, I think it would be damaging in terms of the investment we received. But we just got to get that message out there that, look, it's a real possibility. We can go again. There are plans to continue, and launch is a risky business. I think as we see more and more launches, more and more will be successful, and hopefully our space sector will flourish as a result of it. But there's no doubt that the media coverage around launches, especially with that first UK launch, but with the next one, I think there'll be a lot of scrutiny around that as well. But yeah, it will have an impact, but we need to remember that we know that it's risky, and it certainly wouldn't affect any public investment going forwards from that.
Brilliant. I think we've got time for one or two more questions. If
Hi, Dan Osrin from PwC. The space sector's got a reputation for being very technologically focused, driven. A lot of the founders, a lot of the power behind these organizations. Do you think we need to help the space sector companies be better businesses with new types of skills, commercial, pricing, B2B software, etc. And is there, well, how do we do that, I guess? And is there a role for other accelerators or training programs? I know Seraphim have got an accelerator. The Space Agency have one, maybe quite early stage at the moment. But is that a more important part for government to be playing in this sector?
I think I'll jump in and plug the Seraphim Space Accelerator for this, and actually some UKSA initiatives as well with their LEO Accelerator and GEO Accelerator. Probably did that in the wrong order, but we went LEO, GEO with UKSA, and then on to Seraphim. And that process was extremely good for getting us away from our technical-led messaging more towards market and solution, what the problem is that we're solving, the opportunity size. And talking more and more to prospective customers, and that ultimately led to traction earlier than we were expecting. So it's very much a worthwhile process to do. I'd say it's a recognized problem. It was hammered into us as part of this Seraphim Space camp that you know, your technology is great, brilliant, and this is the case for all technical founders. It's very interesting, but where's the business? And that's the message that you need to hit home. So I would echo your problem, and I'd say that people like Seraphim are very good at that, very good at taking you through that journey. I think, is there room for more accelerators? I'd have to defer to to Maureen and perhaps the accelerator team at Seraphim to say whether.
Yes, so Seraphim one is quite early on. I guess I would actually push back a little bit on the whole, oh, space is unique having technical founders. It's absolutely not. The vast majority of successful businesses, including, you know, B2B SaaS, have an engineer as their CEO. I think the thing is, we do people a disservice by saying like, oh, you're technical, you don't need to worry about your business. No, you're founded a company. You need to focus on that. I think there's a strong issue where you have a lot of, in space, you have a lot of the solution in search of a problem. So I have this amazing tech. Now let me find a customer for it rather than it being problem focused. I think that's actually where a lot of the rot starts, because it discourages people from thinking about commercial for quite some time in their business.
Great. Go ahead.
I think your question was also about the later stage. I personally don't think there's necessarily a need for specific accelerators for the later stage, because the process of trying to operate a business is somewhat staring into the abyss kind of situation, right? So you kind of have to learn by doing, that's more how I see you can learn the best, is like actually doing. So
that makes sense. I think we have time for one more question. I think this lady down front has been.
I've got the microphone. Yeah.
2 questions. Go ahead.
Right. I mean, that I've got a question, but actually just following up on that, and one of the points I was going to make to Heather is on the talent side. We're an executive recruiter. We've worked with ISI for 6 years now, building out all of their exec team, or bulk of it. But one of the big gaps is not just at the early stage in engineering, it is about the growth stage. And it's about having the talent, the experienced talent to help these founders cross the chasm, or whatever it is we want to call it. But also, as Maureen was saying, space isn't unique. These are all startup companies going through exactly the same challenges. And one of the really, really exciting things that ISI did was they didn't want people from space, because there's old space and there's new space. And there was no one in new space that actually knew the things that they knew, because they were so far ahead. So a lot of the people we brought into that business have come from Tesla or B2B software companies, SaaS companies, insurance, insurtech. And it's that mix of skills being brought into space has actually, I think, been one of the key reasons that ISI have accelerated their growth and gone global, because they've used the experiences of all these much more mature technical sectors. So I think the big challenge for the space sector in the UK is not just about engineers, and that is an issue. It's going to be about harnessing all of the experienced serial CEOs across different sectors and using them to be board members or advisors, or just to run programs for later stage businesses as they try and commercialize and then go into that commercial scale up. That's I mean, that's not just an issue in deep tech, in space. That's an issue across deep tech. We all have great technologies, but what's the problem we're trying to solve for the customers? But that wasn't my question. Sorry to hog there. But no, the question is, I think now there's probably more deep tech funds than there's ever been before. And all of these deep tech funds are really sizable and impressive amounts of money. We've got all of these deep tech founders that are getting seed funding really easily, maybe getting A funding really easily. But we're seeing space and deep tech companies grinding to a halt when they try and do either the A round or the B round, because they can get investors in the room, but no one wants to lead the round. So we're seeing companies that are literally saying, yeah, we're 80% there on our funding round, but we can't get a lead. And we've just worked with a French chip company. They raised 90 million A round, but what no one knows, well, you will know now, it took them 18 months to close the round because no one would lead it. So my question is, what is happening? Why will investors be happy to come in on a round, but why is no one wanting to lead it? And is it a UK issue, a European issue, or actually does this happen in America as well? And now I'll stop talking.
We'll very quickly cover that, and then we'll do one more question, and then we'll finish.
I think it's, from where we see it, it's a bit of a UK issue, and we do really struggle with rounds filling up, but there being no lead, no one happy to set a price on something they don't understand. Again, I think that's largely a case of needing to bring people of more technical expertise into VC, bringing more people from operating backgrounds into VC, people who've worked in space like Maureen, obviously coming to Seraphim. I think having those people in the room allows people to have the conviction to come in at those rounds. Obviously, as well, I think the inflection points you need to hit to raise a big Series A as a space tech company are different to being a B2B SaaS company. And there are VCs out there that have a blanket 2 million ARR as a criteria that you need to reach. The way that we see it from pre-seed and seed is that we need to put more money into those early stages so that you can get to those predefined metrics. But we would like to see we'd like to see there be some cultural shift in how space tech companies, especially, and deep tech more broadly, I guess, are assessed at Series A. Because I don't think, especially in the market at the moment, that it can continue to be revenue based. I think also a lot of these funds that are branding themselves as deep tech aren't deep tech funds, and they are just backing B2B fintech or are backing ChatGPT wrappers. So we'd like to see that be redefined, and deep tech, I guess, be identified as what it actually is.
Just to really quickly follow up on that, it's actually happening globally. B+, definitely it's happening. No one wants to price around because there's a massive down round about to happen. Basically, people probably, if they're raising a B+ now, they raised at the height of the market in 2021, massive valuation, and their current status, even if it's a significant improvement, can't support an up round or even a flat round. So there's really serious devaluations going on, and no one wants to actually set the price and agree on what that is. And then also there's an element of the lead obviously has the largest investment, and really investors are also trying to conserve capital, so they're deploying more smaller checks into a number of different rounds they're following. But it's I think it's an unwillingness to have this really painful down round, and can't agree one with the existing investors because you could really significantly dilute them.
Brilliant. And final question.
Hi, thank you. Dawita Govinji from PA Consulting. I think someone mentioned the word sovereign capability, and I wanted to touch upon, well, space is a team sport, and actually it needs to be collaborative capability. And instead of each country solely investing in specific capability, how are, for example, Five Eyes nations coming together to develop those collaborative capabilities? And I think, Heather, you talked about the space sector plan. Are the UK clear on those capabilities that the UK can solely contribute to as part of a kind of Five Eyes wider nation space capabilities?
Yeah, no, it's a very good point. And we recently had the International Bilateral Fund announce its successful organisations, and that fund was focused on this idea of working together with other countries. So all of the organisations funded through that programme are running projects that work with an institution or an organisation in another country. So we've got some really interesting and exciting collaborations being set up there. I think in terms of the space sector plan, the capabilities will be identified there. And then I think we'll need to work with DBT to work out exactly where we think we can work together with other countries to establish those capabilities. I know it is something that they are thinking about, and they're working on identifying the strengths in those other countries, so we can almost cover our gaps by looking at theirs and almost work with them to provide the strengths that we have where they might have gaps as well. So yes, it's something we're thinking about, and it will be important. There are some areas where obviously sovereign capability is important to us. So defence, we need our own capabilities. We can't share everything to do with that. But you mentioned 5 O's. Obviously, those are the countries where we would go to the greatest extent of collaborating. So in short, yes. And we're also looking at, we're a member of ESA. There's lots we can do through ESA. And we do a lot of work with the Canadian Space Agency, with JAXA as well. So they're some of our greatest colleagues. And it would be wrong to not mention the Australian Space Bridge too. I think those are the main ones. But thank you.
Brilliant. Thanks for that. Well, just on that, I think we have some colleagues from Australian government in the room. Don't hold me on that, but they signed up. So speak to them in just a few minutes if that's something you're interested in. I'd just like to point your attention towards my email at the top. If anything has stood out to you, if you want to get in touch about collaborating with techUK, becoming a member, finding out more about what we do on space and tech and emerging tech and everything else, then do get in touch with me. I'll give out my business cards in a sec as well. And 3 quick things. Firstly, our big Tech and Innovation Summit launching this year. Very excited to see that happen. It's on the 8th of November. In-person tickets have sold out, but we've now opened an online option, so you can register for that. We'll cover all the big emerging technologies. There'll be loads of different sessions, hundreds of people attending, so it should be really, really good. Secondly, our Space Clusters event, which is maybe why you picked up on me mentioning Space Clusters a lot. And so it's a webinar where we're partnering with Space Hub Yorkshire, and we're going to be basically upskilling industry who want to find out more about how they can work most effectively with their local space cluster. We'll have the SA Catapult there, kind of setting the scene, and that should be a really interesting one to tune into. It's on our Innovation Hub if you want to sign up to that. And then finally, in the new year, I'll be launching techUK's Emerging Space Tech Report. So everything from this session, our Industries of the Future event that happened about a month ago, the Space Clusters event, will all be packed into that report with member case studies and probably a bit from UK Space Agency as well. So if you're interested in contributing, if you want to shape techUK's output over these past few months, and shape the sector in some way, then do get in touch with me. I'll be delighted to talk to you and kind of gather your views. That's about it. I just wanted to say thank you to everyone for coming, and to our fantastic panelists. There's a lot more that we'll be doing, but in the meantime, check out our Supercharging Innovation campaign, which is on our Innovation Hub on the website. Get in touch with me if you're interested in collaborating, finding out more, and enjoy the pizza. So thank you, everyone.